So here's the deal. Imagine if you had some kind of radar that could alert you to the next big stock move right before the general public catches on. Like, what if you knew this stock was about to make a massive jump before the headlines broke? Well, my friend, that kind of edge is not reserved for Wall Street insiders. It's a skill that you can learn and master yourself. In today's video, I'm going to spill all the beans. I'll show you exactly how to spot trends before they go mainstream. In just a few minutes, you'll be equipped with the knowledge and the mindset to identify those game-changing signals that professional traders rely on. So get ready to unlock your potential as a smarter, more profitable trader. Let's dive straight into it. To start off, we need to tell the difference between real trends and the market noise. A smart trader isn't spooked by every spike or sudden price jump. They know that not all movements are created equal. The key is to recognize what's driven by genuine buying pressure and what's just random fluctuation. Now, think of it like this. Imagine you're standing in a crowded room and someone shouts, "Hey, everyone, look over there." Everyone turns their head, but when they see nothing out of the ordinary, they go back to their conversations. That's the market noise, the chatter but no real substance. But then imagine the person says, "Check out that window. It's incredible," and indeed everyone goes to the window and sees an amazing view. That's a trend. There's substance behind it. How do you tell the difference between the two in the market? Here's what you do. First, check out the candlestick charts. If the charts show a bunch of random movements without any clear pattern, that's the market noise. But if you see a strong upward trend with higher highs and higher lows, that's the signal you're looking for. This simple visual analysis can help you eliminate many false signals and focus on what really matters. But we're not done yet. We have to dig deeper. So now let's bring in some technical indicators to confirm this trend. For starters, we've got the MACD, which stands for the Moving Average Convergence Divergence. It's great at spotting momentum shifts. Now here's how it works. On most trading platforms, you can easily add the MACD indicator to your charts. Once it's applied, you'll see two lines, the MACD line and the signal line. When these lines cross, it can indicate a change in momentum. And when they diverge, it may signal a potential trend reversal. Moving average crossovers are another powerful strategy for trend spotting. All you need to do is plot two moving averages on your chart. I like to use a 50-day and a 200-day exponential moving average. These EMAs will form a dynamic support and resistance area. Whenever the price crosses through these EMAs, it can signal a shift in trend. But remember, the higher the quality of the trend, the more likely it is to break through both the 50 and 200 EMAs in the same direction. And finally, we've got the volume profile. This one's a real game changer. The volume profile shows the amount of trading activity at different price levels. To use it, simply open up your trading platform and look for the volume profile tool. As you analyze the volume profile, pay attention to areas where there's a significant spike in volume. These spikes often align with key support and resistance levels and can indicate where price might reverse. Let me show you a real example. Imagine you re-watching this particular stock and you notice its price has been stagnant around $10 for quite some time. However, recently, the price starts to show some promising signs. You check the candlestick charts and see a potential uptrend with higher highs and higher lows. This looks promising, but you want to confirm it. So you apply the MACD indicator. At this point, the MACD lines are close together, suggesting a lack of momentum. But then something interesting happens. The MACD line crosses above the signal line, indicating a shift in momentum. This crossover is like a green light telling you that the current uptrend is gaining strength. At the same time, you also notice that the price crosses through both the 50 and 200-day EMAs. This further confirms that the stock is entering a new uptrend. Now let's examine the volume profile. You notice that there's a huge spike in volume at the $10 level, which happened to be the previous resistance area. This surge in volume suggests that buyers are entering the stock, pushing the price upwards. But wait, there's more. You remember that this company has its earnings report coming up soon. If you check the news, you'll find that analysts are predicting a positive earnings surprise, meaning the company is expected to report better than expected financial results. Considering all these factors, you decide to buy the stock. Sure enough, the next day the company releases its earnings report and it beats the estimates. The stock price skyrockets, giving you a nice profit. To make your life easier, I recommend setting up alerts for your favorite stocks. Most trading platforms allow you to set alerts based on various criteria. For example, you can receive alerts when the price crosses the 50 or 200-day EMAs or when the MACD lines cross. You can also set alerts based on volume thresholds. By setting these alerts, you'll be notified as soon as there are signs of a potential trend. If you're looking for a comprehensive solution, consider using TradingView, thinkorswim, or Finviz. These platforms offer advanced scanning capabilities, allowing you to create custom scans based on your preferred trend spotting criteria. With the right alerts and scanners in place, you'll be well equipped to catch the start of a potential trend before it gains widespread attention. So here's the drill. Download the free Trend Spotting Toolkit from the description below. It's got everything you need to start spotting trends like a pro. Plus, don't forget to hit that subscribe button. More trading edge techniques are on the way. As we wrap up this episode, I want to leave you with a final thought. The world of trading is constantly evolving, and staying ahead of the curve is crucial. One way to do this is by keeping up with the latest industry trends and best practices. That's why I encourage you to attend upcoming webinars. It's a fantastic way to learn, network, and stay informed. Check out the link in the description for more details. See you there.